Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to be looking at the 13th Commitments of Traders Report of 2021. And as we always do, we shall start off by looking at the largest changes in commercials positions. But for those of you who are new to COT analysis, then please visit us at COTbase.com. We offer a lot of educational material, not only in written format, but in video format as well. So back to the review, and starting off with our first market, the cocoa market, where we have a 24% change in commercials positions. So you can see that change magnitude over there, meaning commercials have actually decreased their net short positions. Large speculators also, but they decreased their net long positions. Comparing this size to the past 52 weeks, it's definitely greater than average. It is a bullish COT change signal, suggesting we may see a bit of a rise coming early next week. We wouldn't be surprised to see that because we've been in a declining mode for the past few weeks now. Moving on to the 5 years chart, you can see if we have an extreme, and the answer is no, not a significant one for sure. The last major extreme was this bearish one from roughly a year ago, just at that top. What a beautiful signal. And you can see multiple examples of bullish extremes in the past. So if you look at those levels, we are more or less in between them. And I wouldn't want to go further with this extreme analysis because I really like to have a clear picture. And these examples are the ones that are definitely clear and not the one that we're at right now. So moving on to the next market, which will be the Chicago wheat, where we have a 22% change in commercials positions. You can see that magnitude over there being much greater than average, pushing commercials into net long territory where actually large speculators are at right now, which basically means that only small speculators have short positions, net short positions, of course. In itself, it can be considered a bullish signal, but definitely in the way they're moving is a bullish signal. This is coming after a decline, so we may expect some sort of rebound in the market, a little bit of bounce upwards early next week. The 5 years chart shows us if we have an extreme, and no, not really. So, definitely not these very clear extremes that we had in the past. So once again, I wouldn't want to spend more time on that. The Minneapolis wheat would be the next market. That's the next on the list, but I think I'll just jump over that and go over to the Euro British pound pair. We have a 17% change in this market. Of course, if we switch to the 1 year chart, you can see it over there. It's larger than average. We've seen greater changes in the past. It suggests some further weakness coming early next week. What I always say about this market, and I'll just scale to the entire COT history, is let's not forget that we only have a limited COT history in this market. So if anybody is trading the Euro British pound pair, I would strongly suggest you to analyze the Euro COT report separately and the British pound COT report separately to really understand the differences between these markets. And then you can base your decision on that. Nevertheless, we have a slight bearish COT chain signal. That's something you can put in your system. Moving on to the large speculator COT extreme analysis, let's start with lean hogs. Now, these complex markets, just if you're new to this review, these are something for our subscribers where we combine these markets that are in one category and try to give a picture based on the entire market category. So lean hogs will be the next market. We have a 98 report extreme in large speculators. So you can see that over there, meaning roughly 2 years ago were traders at such extreme levels. And you can see that more or less coincided with this price level. And then after that, you can see what happened. So I'm not saying it's going to happen right away. Of course, COT analysis is kind of like stress measuring a volcano. So you don't know exactly when it's going to erupt, but you do feel the rumbling in the deep inside the mountain. So that's what we see in lean hogs, the rumbling in deep deep down. So traders are increasing their positions to really, really high levels. So stress levels are very, very high. So if you're someone who has been long in this market, you can maybe start thinking of scaling out, or if you're someone without any positions and interested in, you can start, planning on possibly entering somehow one day. This can go on for another few more weeks, month, actually. I wouldn't be surprised. I'm just saying that, it is a stress level that should be mentioned. The next market will be another currency, this time the Japanese yen. Here we have, again, the same exact extreme, 98 report extreme in large speculators. We had that extreme roughly over here about a year ago. It was, of course, a bullish extreme signal pushing the market a bit higher. This can grow. So once again, it's hard to tell how further these trader categories are capable of increasing their positions. So I wouldn't be surprised to see commercials reaching maybe even an all-time extreme level. Who knows? One thing's for sure, it has been very dynamically increasing since early this year. Just at that top, we had a bearish COT extreme signal pushing the market down, and as the price is falling, we're not surprised to see traders shifting their positions accordingly. Now, is this the point where we're going to see the trend change? No one can tell. You shouldn't try to catch the bottom, but definitely you can be prepared that stress levels are huge. And last but definitely not least, let's open gold, where we have a 95 report extreme in large speculators. That's roughly over there. It is more bullish, I would say, but we definitely have space left for that bullish extreme to arise. I would say, this 5 years chart shows you a beautiful examples when commercials actually switch over to net long territories and large speculators are net short. That would be a humongous bullish COT extreme, and you can see how well that pinpointed the low in the market. That's not the case right now, meaning this decline could continue. But in relative terms, it has moved away from these bearish extreme levels as the market is in a bit declining right now. So, this is a brief picture of what's happening in the COT report. If you would like to have a look at other markets, you can definitely do so. We offer COT data on all major markets. All the newest COT report types as well are available at cotbase.com. The disaggregated, the TIF, the CIT report. You can look at the futures only data or the combined futures and options data. And we're very proud to be able to provide you with options only data as well. If you're looking at a different data set specifically, you can analyze that if you want. There's no issue with that. We have a lot of tools that are at your disposal to use to better analyze the market. If you are analyzing a specific market, let's say you're trading crude oil, you can definitely do that. We have all the data regarding crude oil in the system. And what's wonderful, if let's say you're interested in open interest, you just click over here on open interest and you'll have the ability to analyze the open interest on the charts, or commercials long, commercials short, whatever you're interested in. Are you interested in only the futures data? Let's take off the rest. Or you're interested in options data only, then let's have a look at that. So all of this is possible using our system. So that was all for this review. I very much appreciate your attention. I wish you a pleasant weekend. Happy Easter. And I hope to see you next time. Take care. Goodbye.